you are not good at numbers, or finance is all about numbers, and
leave it aside.
Leave it aside.
Your husband or father will take care of it. We're here to talk about women and investing, or shall we call it retail therapy versus real wealth.
They may be coming from a good intention, which is division of labor. Okay, you manage the spending part, I earn, you look after kids, I give you the money, you go and manage it well. What it ends up doing is eroding the confidence of women to manage money. So there is no objective measure that I've seen where they've measured the knowledge or skill of men when it comes to money, and then knowledge or skill of women. It's always, do you feel confident about managing your money? And women report less confidence.
Yes. Hello everyone, welcome to Paterson's special guest podcast. We're here to talk about women and investing, or shall we call it retail therapy versus real wealth. Maybe we'll get more views. So yes, you can have your, we love our sales, and we love to go, whether it's end of season or not. But actually, we should love our compound interest more, in my opinion. To help us through this maze, what may appear to be a maze, we have with us Hansi Mehrotra. Hansi, welcome to this podcast.
Thank you for inviting me.
It's a pleasure having you here. Thank you for taking time out. Now, Hansi, you are one of the earliest women CFAs of India. You also have your certification in private wealth from Wharton, and you have your diploma in investments. You're right up there. How did this all begin? Are you a numbers person from the start?
Well, thank you first for inviting me. It's a pleasure to be here. But to answer your question, am I a numbers person? I was decent in math, but I only did it until year 8.
Okay.
Which I think every kid has to do anyway. So beyond that, I never did it. So therefore, I never found out. But I have also realized since then that finance is actually not really a numbers thing only anyway. That's a misconception that people have. So yeah, but that's not why I chose finance. That numbers weren't the thing. So there's a bit of backstory. Let me just maybe take a sort of detour. So I was in a small town in India, in UP, between Kanpur and Lucknow. And actually, I jumped a couple of years in school.
Okay.
And therefore, I had no choice but to go to a girls' Hindi medium arts education.
Okay.
And in that, I had to choose some subjects, and economics happened to be one of them.
Okay.
In Hindi medium. So I studied Arthashastra.
Okay.
that was fun.
Okay.
That's where I first got an interest in economics. And I found it fascinating in terms of both micro and macro. But then I did want to do medicine, and I wanted to be a neuroscientist, and I wanted to study how brains work.
Okay.
As life turned out, I couldn't do that either. And therefore, I had to fall back on my arts education. And again, economics was there with me all along. Interestingly, years later, I realized that economics and finance is all about human brains, both the psychology and the neuroscience of it.
Absolutely.
So what I couldn't do as a neuroscientist, I was able to do as a finance person. So life has a way of connecting the dots. So that was that. But back when I was trying to do medicine and science, I remember my father was very keen that I become a doctor, a lawyer, IAS officer. He wasn't too keen on me becoming a stockbroker.
Okay.
And this is when Harshad Mehta was actually at his peak, and I was like, oh, I want to be like a stockbroker. Yeah, late 80s, early 90s. And that to me is interesting because a father who was as forward thinking, encouraging me to do any career I want, still was saying stockbroking is no place for girls. Partly because back then there was an open outcry, and you had to go into the pit and all that stuff. So it wasn't very encouraging.
Conducive, maybe.
So yeah, but I still, the stubborn girl that I was raised, I said, no, that's what I will do. So that's what I did eventually. So even though I had an arts background, I could get into finance after going to Australia. Remember also at an undergrad level, there is no finance degree. Right? Most people have commerce or economics.
Right.
And my economics was enough for me to really get into the finance industry. I just did a diploma in applied finance and investments. And I did that fine. And then years later, this whole women thing became an issue again. But until then, I have to say, in Australia, with an arts background, getting into finance was not an issue. In fact, there, I did my CFA in Australia. So when you say I was one of the earliest CFA charter holders, women charter holders, that was in India because I had an Indian passport. But actually, I did it in Australia, where being a woman didn't matter. There were many women colleagues of mine that were doing it as well. So it didn't occur to me that I was doing anything unusual at all.
Right.
Yeah.
That's interesting. Harshad Mehta days, and I think the only BSc woman broker was Neeta Mehta, if I remember right.
Deena Mehta.
Deena Mehta,
Yeah.
yes.
Okay, yeah.
Yes.
I didn't know of her. I got to know her. I mean, I got to know of her more recently. I think I met her actually. But back then, Harshad Mehta was the poster child, I guess.
Of course.
Yes.
So this is a women's podcast on finance and investment. Why do we have to do this in the first place? Why is it that women, as far as investing is concerned, you need to have something special to attract them? Why don't they watch normal podcasts or normal thing for finance? You think there is something that is intimidating them about finance?
That is the billion-dollar question, trillion-dollar question. I don't know is a short answer, but there is much, much, much more to it. I think, firstly, when people talk about women and money, even in your intro, you talked about sales and whatever. I think women and money has multiple aspects to it.
Right.
I think there is right at the very beginning, at the earning level itself. So women are not earning. Well, firstly, they don't have enough jobs, especially in India. The labor participation rate is much, much lower, right?
True.
So there's a sort of that aspect. In other countries, for example, they do go and get jobs, and that's fine. As soon as they start earning, then the second aspect is, do they earn as much as the male counterparts? And there, interestingly, world over, there is a discount. Women earn less for the same job, which is a point to make, because sometimes people sort of say, oh, but they don't earn high-paying, they don't go for high-paying jobs. They only work in marketing and sales and secretarial. But that's not true. Even for the same job, they earn less.
They earn less.
So there is a bias.
So it's a worldwide phenomenon.
It's a worldwide bias, yeah. That's the second. And then the third aspect that we can talk about is the investing part, right? And there also you can say, one is, do enough women have their own investing accounts? Yeah. And the answer is no. So even in India and world over, you see that there are more accounts being managed by men. Sometimes it's in the woman's name, but still being managed by men.
Very true.
And women are not managing the accounts. And then the last aspect is, even when they do manage, do they take as much risk as men? Yeah. So even their risk profile tends to be lower. So in all four aspects, women seem to be lagging behind. Now the question is that a biological issue? Or is it
men are from
Mars, women are from Venus?
Yes.
So the question to ask is it biological or is it psychological or conditioning, social conditioning? All the research that I've read, and I've asked a bunch of experts on this. I mean, remember, I'm not an expert on this. But when I've asked, most experts tend to agree that I think it's most likely to be social conditioning. It's most likely to be. So it's not that we are wired differently. We probably are, but not therefore making us inferior to men in any way. We're just different. But in this aspect, I think the fact that women are conditioned and told from early on that you are not good at numbers, or finance is all about numbers, and
Leave it aside.
leave it aside.
Your husband or father will take care of it.
So to me, they may be coming from a good intention, which is division of labor. Okay, you manage the spending part.
Right.
I give you this. I earn. You look after kids. I give you the money. You go and manage it well. It may come from good intentions, but what it ends up doing is eroding the confidence of women to manage money. So I think it becomes a confidence issue. Now, that has been consistent throughout the world. Whenever I've seen surveys, they do say that women are less confident. But I want to say it's self-reported. Yeah. So there is no objective measure that I've seen where they've measured the knowledge or skill of men when it comes to money, and then knowledge or skill of women. It's always, do you feel confident about managing your money? And women report less confidence.
Yes.
And I want to stress that point because I think it's, I go to parties very often. Okay. And I tell people, first question people ask is, what's your name? What do you do? I ask them and they say they're doctors, lawyers, whatever.
Right.
They ask me, I say I work in finance. Men proceed to tell me what the stock market is doing, even though I've told them that I'm the finance expert and they are doctors, lawyers.
Yes.
Women say, Arey, I don't know anything about money. I don't have a head for numbers. Please go and talk to my husband. So here, I'm telling you that even when men have no idea about money,
they're confidently
talking about it. So I feel this self-reported lack of confidence is an issue. Yes. So I think women, if you're listening to this, you know as much about money as men. Okay, you just do.
Right.
Take it from me.
It's there.
it's the fact that you feel less confident is the issue, and sometimes it works to our favor. You know why? Because men are overconfident. They trade more and they lose more. So us being less confident sometimes works in our favor.
Yeah.
But most of the time it doesn't, because we end up sitting on cash or gold and we don't invest at all. So I think that lack of confidence is what we need to work on, which is why, coming back to your original question, why do we need this podcast? In this podcast, if we have one message, it's there's nothing wrong with you. There's nothing wrong with your knowledge. We're here to boost your confidence, okay? This is a community sisterhood thing. So come and talk to us. But otherwise, there's nothing wrong with their knowledge level.
I guess it's the, like you said, the inclusiveness. You include them, because women have been very good at managing household budgets. They never run out of anything. Even if a child has got something extra to ask for, the mother is the one who will give. They don't go to the father, they'll go to the mother. So why this investment alone is left behind? Many times we ask our clients to please come along with their wives for the meeting. And we are encouraging them to, step forward. And like you said, you don't say, I don't know anything about it. Hear it at least, it's not rocket science. In fact, I started with great fear of numbers. This is the first job I took, and in finance, it was by default. It was not a choice at all. And slowly, it was that when you jump into the pool and you learn to swim, kind of a thing. So basically, I think people have to take the plunge, and then they, they can get rolling, and they can really do it very well and very fast. Like you said, we may have an advantage.
On that point, I just want to add one more thing, I guess. In terms of women and why they don't turn up to your webinars or seminars or whatever on money, I feel there also women themselves bucket themselves into saying, so I guess they're women who don't have any money, as in like they're not earning, they're reliant on their husbands or fathers or whatever. So I feel when the man in their life says, we earned it and we are managing it, don't worry. They feel that that's okay, right? Because they didn't earn it. Yes. They don't have any. Then there's, they don't know how to manage money. Then they just don't have an interest.
Right. Lethargy on trying to
It's
learn
not lethargy.
also.
They just feel it's boring.
Yeah.
It's just boring.
Yes.
Okay. So I guess we want to address both women who don't know how to.
Yes.
They're interested but don't know how to. And then there are women who are just not interested. We also want to tell them, please come in and listen. It's not as boring as you think.
Yes.
In fact, I would say, I find finance very fascinating. And I want women to encourage to just listen to a few stories. And the reason is because finance in the end is all about human psychology. Remember, I started with wanting to understand brains.
Yes.
So if you're reading fiction, you get into the character of why the character is motivated to do something, right? Similarly, if you were to understand what business some founder is doing and why they're expanding or not expanding something, I find that very fascinating.
Correct.
So I'm just saying that if told in a certain way, women may find it interesting also.
Right.
Yeah. So it's maybe, and that's why the podcast format is a different way than a very business channel, which is very numbers and very dry, I find. Maybe this format may work better. Maybe community formats may work better. Maybe fiction formats may work better. Maybe, I don't know, the bunch of formats that the world is trying to make it more interesting for that last segment.
Right.
Yeah.
That's wonderful. So the thing is that look at the practicality of it also. We were recently referred to a lady who had lost her husband, and her husband used to manage all the money, and she had no clue. So apart from the grief, she also has to cope with so many maybe well-meaning relatives and friends and things, people who totally confused her. So is it not better to start early, get a grip, and be aware of things, what is going on at least? And like you said, it's not so dry, and it's after all to do with your future and your thing, right?
Yeah, absolutely. I think women at some point in their lives will have to manage their money.
Yes.
Yeah. You do not want to be reliant on a guy, I feel. Either your father, then your husband, then your son, or an external financial advisor or a lawyer.
Yes.
Because at some point, you need to take advice from them. So at least get enough of a grip that you know how to judge their advice.
Exactly.
Okay, I'm not saying anyone should learn enough to pick your own stocks. Even I don't pick my own stocks, and I'm a CFA. I'm saying just learn enough to know what is reasonable.
Yes.
So when somebody gives you biased advice or incompetent advice, one or the other, chances are you will run into either biased or incompetent advice.
Correct.
In fact, I would guarantee you will.
Yes.
Don't be taken for a ride. So understand enough that you know how to call it out.
Yes.
To say, hang on, this doesn't make sense.
Yes.
So just about learn that much, I would say. I don't think that's a non-negotiable.
Correct.
To me, it's like as much as understanding how your body works.
Yes.
Right? I mean, you wouldn't give that up. I mean, if a doctor tells you, you wouldn't just take their advice, right? When something sounds off,
amiss, yes.
then you go and get second opinion, right?
Yes.
Similarly, get to a level where if somebody gives you advice, if it sounds off, then get a second opinion. Yes. That's the level.
Also, it's mostly common sense, right? A lot of things come together in a way that collates common sense with some numbers, maybe. But
yeah, but actually, no. There, I would say that sometimes it's not just common sense. It's so, for example, rate of return, right? You may be given a piece of data that says this fund or this asset class or this whatever product has given 15, 20, 30% returns over the last 5 years, right? This piece of data is correct. It's a statement of fact. This has given return. If you weren't trained in finance, common sense would say it's very human to extrapolate. So if something has given something, like a car, kitna deti hai types, then you think, okay, this will give in the future. It's only when you have a little bit of an understanding that markets run in cycles. So if something has given a higher than average return in the past, chances are it will give lower than average because it has to come back to the average, right? So you have to have some sense of what equities do over the long term,
Yes.
what bonds do, what gold does, what cash does. So all of these things you do have to have a little. Common sense is not enough, I feel, because these environments sometimes run for 30 years, 20, 30 years inflation. The last 30 years, my whole career, inflation has come down. So if I even looked at the 30-year data, I may get mistaken
Okay.
and make the wrong sort of move. So I feel some awareness of some of these economic or financial matters is a bit of training and maybe counterintuitive. It may not be common sense.
Okay.
So yeah.
So basic asset classes, what they are, how they work,
Correct.
how they should be combined together. What is the mix you should have, and you should have all of them. You should not have a bias towards one. That is an important thing that they should be.
Correct.
They should understand.
And it's freely available, and that's the sort of thing. That's why I do what I do. So yeah.
Yes.
Yeah.
So have you seen any age-wise, difference in behavioral things as far as investment is concerned from women? You've done a lot of financial wellness workshops. Tell me about that, Hansi.
I don't think there is an age related to women per se. Actually, even with men, right? I mean, you will behave differently at different ages, and that's more a function of how much runway you've got left to make mistakes and how much you have accumulated, right? And that applies equally to men and women. So I don't think there it's a difference.
Let's put it this way: the generational age may have been around, but generational.
Yes, generation makes a difference.
Yeah.
And the reason it does is related to the point that I said earlier. Because economic environments and financial environments change, and they change decades apart, right? When you came of age, so when you were turned 18, 20, just like you remember the music that when you came of age, that was the music that you grew up with.
Oh, yes.
That stays with you, right? So Spotify listening age is about that, right? Similarly, there's research to show that when you came of age, whatever the financial environment was at that time, the economic environment at that time, that affects you and your behavior for the rest of your life.
Oh, wow.
It does. So, if unemployment was high and job uncertainty was high, then that affects you.
So that memory clings to you.
And same thing with returns. People, I remember when I went to Australia and inflation had come down and therefore returns had come down. But the older people would always keep saying, I remember the time when interest rates were 18%.
Yes.
Yeah, but inflation was also 15%, right? So they don't remember, they don't know that it's a real return that matters, right?
Yes.
So like that, when you came of age, what was happening affects you. Also, when you were a kid, when you were sitting at the dinner table, how was money discussed? Okay, so that also makes a difference. And again, men and women, okay? So for example, if people used to say, parents used to say, money doesn't grow on trees, right? That affects you. It scars you. or it's only money. Aur aa jayega. That has a very different impact, right? So
Absolutely.
I mean, again, there's research to show that your childhood influences your economic environment, the knowledge level. The knowledge level is one thing you can fix.
Yeah.
Right?
Correct.
But your childhood influences and your coming of age, it's like relationship scars, okay, or parenting scars.
Yes.
Until you go to therapy or consciously deal with it, you may not be aware that you're making those mistakes. You may not be aware that you are. So in finance, we have a thing called behavioral finance, right? So there are behavioral mistakes that you're making that you may not be aware of, which is why financial advisors may be a good thing, just like elite athletes have coaches.
Correct.
Obviously, they play tennis better or play cricket better than the coaches. But why do they have a coach? Because they have someone else looking at them and taking an unbiased view and saying, hey, you're making this mistake. Like that, even if you know money, even people who are financial experts, having an external person point out what mistakes we're making is a good thing.
Yes.
But provided they're trained and unbiased.
Yes. True.
Yeah.
I always thought, nowadays children get pocket money and then things like that. I wondered, is it a good idea to introduce concepts like money and investments and things at the school level, maybe grade 8, 9 or something like that? What do you think?
Good idea, yes. And it's being tried. I've actually seen the stock exchanges put booklets out. Different banks have tried it. So I think it's being tried all over the world. This people have been calling out. But I also feel sorry for the schools, I guess, the school kid, because everything that you see today, climate change is another one, right? It should be taught at schools or something else. So I feel they do need range. They need to be introduced to a wide range of things. Yes, but there's also research to show that sometimes if you're not able to use the information there and then, you may forget it. So even if you do introduce in schools, but you're not earning, you're not putting it to good use. So closer to the time or when you start earning is a better time. I think there is in fact research. There's a lady, Amanda Lusardi, I think. She's been in very vocal on this financial literacy. And there's a financial literacy test also. And this discussion I heard in one of her podcasts. And this point was made that closer to the time when you earn is probably a better time.
Okay, so it stays fresh in the
So it stays fresh, yeah. So maybe a little bit of introductory concepts in school would be fine.
Yeah.
But no point bombarding them with information that they will forget.
But for parents, please watch out your dinner table conversations.
Yes, that is more important.
Because the school is not going to take the place of the parent.
Yes.
You spoke about climate. You've been associated with Zerodha's Rain Matter, and I've seen your videos about climate. And you've also said that you like to talk and ask questions about money, women, and the climate. So do you think climate change, of course, everybody knows it's happening. In one context, I'd like to know more about how you got interested in this area. The other is that this climate change, is it going to bring any changes in investment patterns and things like that? What do you think, Hansi?
That's a very interesting question. Nobody's actually asked me this before. And interestingly, that's how I got to climate. In that I was interested in money. But when I entered the industry in the early 90s, I realized that companies, especially in Australia, because it's very mining-oriented environment, they weren't taking the environment into account. So there were externalities that weren't being priced. And being an economics student, I was exposed to that. And therefore, I thought that at some point, either regulation or reputation will be risks that they'll be exposed to, and the company's behavior would need to change. Interestingly, it's taken 30 years to get here. And so when I started in my career, I was going to be active. I was actually, my first job as a financial advisor was as an ethical investment advisor. And that ethical became socially responsible, then became responsible, then became ESG, now has become impact investing. And that's how I got to Rain Matter, right? So that journey I have seen over the last 30 years. But interestingly, it's taken that long. And my thesis back then was, as much as I would like it to, it may not change until the consumer, the customer of those companies asks for it. And we are still only just getting there. We still haven't got there. Even now, ESG was a fad until a few years ago, and now it's died down. In fact, there's a reversal.
Statutory thing imposed, so they were trying to do it.
Right. So therefore, I'm saying to you that the fact that the consumers are not demanding it yet means that it's still not become integrated into finance, which it should. In fact, the reason I spent the last 2.5 years with Rain Matter is because I wanted to learn climate on the ground. I'm now leaving that and going back to finance, and I want to do climate finance. I want to get more money into climate startups to do just that, so that they can come up with better solutions, and we can also sort of raise consumer sort of awareness. My thesis is, and I've not studied this, I would love to do a PhD on this, so if there's any advisors, please let me know. But right now, my thesis is that corporate profits world over have been at record highs. I think they have taken too much profits out. That needs to swing. Usually it swings in favor of labor, but I feel it needs to swing towards environment. They have to pay more for the right to pollute or the right to have carbon emissions or carbon trading, whatever mechanism you use, whether it's a regulation or markets, you need to pay more. Corporates need to pay more, and therefore, I think profits should come down. But I haven't done my PhD yet, so I don't know that for sure. Yeah.
But yes, like you said, the journey has started.
Yeah.
In your view, so India has been a country that has been always environmentally conscious if you go back in time. But somewhere, the westernization and things have come in. But I see today a lot of people who are again tilting towards, the younger age. Now, my generation is different, but the younger age, people are more conscious about things. So from here on, if we work very hard at things, and how long do you think it would be to get planet back into some shape?
Gosh, I don't know. Your point about India has always been conscious. I wonder whether it's because our mythology incorporates nature. We have we worship water and trees and sun and moon and so on.
So
I think our
culture itself is
mythology, religion, everything has been intertwined with nature.
Right.
And I think my generation probably was our generation, I guess, in terms of, we're separating our lives out of this. I don't know how conscious the young generation is. I know people say that, but I see them ordering on Swiggy, Zomato, and that's the plastic pollution that we see all the time. I don't see them. From what I've seen, I feel because they're not earning as much, and maybe I'm being cynical, but I don't know is a short answer. I think we need to do a lot more work, a lot more awareness, raising in terms of what needs to happen.
Right.
And
should become a movement kind of a thing.
Yeah, and and at the moment, the spending power is with the parents.
Yes.
Right? So we do need to educate the parents right now, which is, again, our generation as opposed to the young kids. So how many years? I'm hoping in my lifetime that things would have swung. In the listed market, you can kind of see that coming in through regulation. So I feel that's a good sign.
Yes.
The reporting has increased. I feel once reports are made, they're read more. And now with AI reading the reports, they'll be summarized more. So I feel that is already happening, and that's a good sign.
Now, Hansi, this is an age when there are influencers for everything. So you have beauty and fashion and financial influencers and all that. And you are one of the most highly qualified, overqualified person. I wouldn't call you an influencer, definitely not. But you're talking directly to people. You're addressing an audience who you're trying to educate them about things. Whereas your background is with Mercer. You helped them set up the wealth management division at Sydney and in Australia and Singapore. Whereas now you're talking to, I think you're doing something much more relevant and important. So highly qualified for that. It's really admirable, I would say.
Thank you. Actually, that leads me to a very interesting point. We want awareness level to be raised about money, and I think therefore influencers did a good job in doing that. Things that the regulators and the industry couldn't do for many years, decades. Influencers were able to do by better storytelling, more relatability, multiple formats. I think that's a good thing. I also tried that. I made the first comedy series on finance. I did a Hindi podcast, Meri Pyari Saheliyan, on finance. I did multiple different formats. I did stick figure drawings. I love experimenting. So yes, I think you're right. I may well be the most qualified B2C sort of communicator. I don't see that as a step down. Yes, I can earn more money holding a job, working in the institutional space, definitely. But in the end, you have one life.
Right.
And this is what I teach in my finance classes also. You have to work backwards from what you want to achieve. If my objective is to be happy, and to be happy, it may not necessarily come from more money.
Yeah.
It comes from three things that I've figured out: good health, mental and physical,
Yes.
deep relationships, and meaningful work.
Right.
I chose to work on the meaningful work part.
Correct.
So to me, meaning came from doing this communication work. So taking my institutional background. So I love reading the Financial Analyst Journal. I can read the CFA Journal and translating it to simple English. I love that. And to me, it's a superpower. I don't think there are institutional consultants who can do it.
Yes.
And I don't think there are influencers who can hold a debate with me on whether modern portfolio theory is relevant or not. So I feel I have that sweet spot between the two. Why not? I love it. I love it. So it's, do I earn money from it? No, I don't. I have not even activated my YouTube ad accounts or LinkedIn ad accounts or Instagram. I get emails all the time. Even during COVID, I think going into COVID, I think I had a reasonable number of followers. But I didn't take that option during COVID because I feel, I think ethics plays a part.
Right.
I didn't want to endorse cryptocurrency like Bitcoin or anybody else. I mean, whatever. I have never really taken an ad. And I don't want to start now. So I will earn my money from other means.
Okay.
To me, my retail education continues to be ad-free, bias-free. And I think it's important work. As I said, it keeps me also engaged with what in the end matters. And by the way, I feel I should make that point. Even when I was at Mercer, when I first joined Mercer, they were a very institutional shop. And when I joined, I remember my colleagues used to have this very attitude, you're retail, you don't need to know that much technical stuff. And it's like, no, in the end, if you're advising a pension fund or a super fund, your members are retail.
Yeah.
Right? I mean, CalPERS or whatever, they're teachers, right? You have to still communicate at their level. So the job that I took on within Mercer, part of my project was in fact taking that institutional research and making it into a one-page summary. So that one-page fact sheet that you see universally now,
Right.
I want to say I invented it. In the absence, I think maybe Morningstar came up at the same time, but around that same time is when I sort of did that. So I think it's, in fact, Richard Feynman and a bunch of other people have said the same thing. If you are not able to explain something to a 7th standard kid, that means you don't understand it.
Okay.
So I would challenge an institutional consultant to go and explain it to a high school kid. If they can't, then they probably don't understand it. So I love it. I'm proud of it. And I continue to do it, even though I don't get paid well. In fact, I feel sometimes I don't know, I feel younger or not get taken seriously by very institutional people or very senior people because I feel like I do this work, but I love it. I don't really care. In the end, do what makes you happy. You do you. And I do me. I love, in fact, if I could, someone is out there giving me a chance, I would love to do finance comedy again.
Oh,
if someone can write me a script, I would love to do it.
That's great. And so many people are benefiting from this. Do you get feedback, Hansi, that how it's worked for them and things like that?
Not as much as I would like. You get, and I would love it if someone is watching. Please leave comments on YouTube and whatever, so that we get feedback. Otherwise, we are creating in a vacuum. And I think in the absence of me charging for ads and stuff, the only reason I keep doing it is when I get feedback.
Yes.
So I don't get enough feedback, but when I do, it's usually good. When I connect with people now and I see that they've been following me since 2015 or 16, I feel very proud. It's like, okay, 10 years now they've been following me. So yeah, I think it could be better feedback wise.
Right.
But yeah, I think people are just generally shy and not many people actually give. I mean, to be honest, I don't give feedback to other people, so I can understand why people don't come out and put a comment.
Right. True. I have some statistics that's interesting. It says that 1 in 4 stock market investors today is a woman, which is probably up from maybe 1 in 50 in the earlier, maybe a decade ago. But there's an interesting story here, Hansi. One of my clients who lives in the US, she has a vivid memory of coming to the Paterson office in Chennai, which is a big building in Paris Corner, the rickety lift, sitting quietly while her grandmother, this was in the 30s, so the grandmother would come and transact in shares. And the lady has left behind a legacy. She has given her shares to 4 or 5 grandchildren. And my client is still, enjoying the fruit of that. So that is the power of, what investing can do and how things can compound over the years. And maybe this part of it is also something that people should understand, that you leave it for a long time, blue chips, and that compounding is required. Whereas you look at into only the safety angle, and then you don't get the compounding effect.
So there's two things I want to say. One is the how to approach wealth, so safety versus compounding, and two is leaving a legacy. On how to approach money, people talk about asset allocation, which is a very technical term.
Yes.
But in the end, all you're doing is you're dividing your assets in line with your goals.
Correct.
You have multiple goals, right? You do first want to protect what you have.
Yes.
And then you want to maintain its power, its value, sorry. And then you want to have fun in life.
Yes.
And then you want to leave a legacy, right? So that's the hierarchy.
Correct.
So the way I like using analogies, and the way I explain it to my audience is saying building wealth is like building a house.
Okay.
Now, what do you do when you build a house? If you want to build, first you have to get a blueprint, an architect's blueprint, right? And what is that? That looks at the lay of the land that you're building on, but also looks at the environment you're in.
Correct.
And also looks at the capability of yourself and your architect.
Correct.
Right? Like that, you should understand the economic environment, your own capability, your financial advisor's capability. Okay? That's the blueprint.
Okay.
Next, you put the foundation down.
Okay.
Foundation goes under the ground, which means you hide it.
Okay.
So there's certain amount of money, emergency or essentials, I want to call it, the essentials foundation, where you do not tell people, you just hide it.
Okay.
Women have been doing it intuitively with the gold,
right?
Which they collect. But I want to say do more than that. Put an emergency account in your name.
Correct.
Some people put their house in that as well. Different people approach it differently depending on how secure they feel.
Yeah.
And also insurance. So gold, emergency account, insurance, and house are the 4 things that go in this essentials foundation.
Okay.
Wow. Then on top of that, you build your pillars, which can go higher. Right. There are 2 pillars. One pillar is your skill set. Okay. So this is what your ability to earn keeps getting better. Okay, right. So keep educating yourself. In today's world, it could be AI.
Upskill yourself.
Upskill yourself so you can keep earning more. Yes. Because majority of your wealth will come from your earnings.
Incomes.
Yeah. The second one is building a blue chip portfolio. When I say blue chip, I mean not the top 50 stocks per se, but building a decent, good quality portfolio that will compound over time.
Yeah.
Long run.
Right.
I would say long run is your lifetime, which is long enough.
Yeah.
Okay, 30, 40 years that you want to build. And then on top of that, you have your fun roof, which is where you want to have fun and you want to invest in high risk, high return opportunities.
Okay.
Which, if they pay off, you could be a different strata of society. If they don't pay off, the rest of your house is still standing.
Yeah.
So whether it's your career, it could be someone coming to Bombay and wanting to be a film star. Someone wanting to become a cricketer.
Yes.
Someone wanting to do some other high risk career. Or investing in Bitcoin, or investing in some startup that does well, right? So these are all things that individual stocks or individual properties or individual careers are high risk careers or high risk opportunities. You think just because you have researched them,
Yeah.
they're not. But take it from me, who's lost money, wiped out twice, and my father also. So very smart people can get wiped out, right? So we are overconfident. So I feel anything individual is high risk, high return. So make sure you do that with caution. ESOPs, okay, even if you work with Infosys or whichever. I mean, I'm not picking on them. Any company, it's high risk, high return because it's one company.
Just one concentration.
Yeah, just one concentration. So basically, that's the house. So that's how you approach. Now, your ability, your human capital goes in the essentials, yeah, which I forgot to mention earlier, which means that as you get older, your human capital is depleting.
Correct.
And therefore, the rest of the house needs to be more robust. Early part of my career, I could take these risks, get wiped out, and start again.
Correct.
Because I had time on my side.
Right.
Having said that, because no accident happened, okay, there are people in my family where they got a disease, they got hit by a bus or a car. So things can also happen. So don't take it for granted just because you're young, nothing bad will happen.
Correct.
So I feel, you need to kind of balance that. And that exact balance, no financial advisor can tell you. You have to judge it.
Right.
My view is when you draw that house, if your house looks out of whack, then you know what the answer is, right? If you feel more secure with a huge foundation and a little tiny roof, that's you. You do you. Coming back to your legacy, you mentioned this lady who came in. I personally think, and this is going to sound ironic given that we're capitalists, I think people who are obsessed with wanting to leave a legacy for their children, wanting to give their children an unfair advantage, because let's face it, returns on capital are an unfair advantage. They only come to people who have assets. The majority of the world doesn't. So if you are listening to this and you have assets, I feel you are compounding and making your children starting at a higher, you may feel better, but I just feel you should look around you and don't assume that world will not revolt. Or if you have, it's like saying, imagine if babies were born with the compounded knowledge in their brains already. How would that feel, right? That would be unfair, right? All babies are born equal.
They have to go through their childhood and they have to enjoy that.
So they can always get it by reading the books.
Right.
That book is available to all the babies, right? So if any baby reads it, they can get. I feel money should be a little bit like that. So one unpopular opinion that I have is there should be death taxes or inheritance taxes. There shouldn't be a huge unfair advantage being given to the next generation. Partly because I think that's how capitalism works, but partly also I feel you're spoiling them. I mean, I don't think they would work as hard. Having worked, I mean, you mentioned Wharton earlier. I went to that Wharton class. The minimum to get into that room was $300 million. I've seen parents struggle with their kids because they were given too much money. So I feel Indian parents' obsession with wanting to leave too much for their kids is not healthy. I think it's okay just about to give them an education and then a little bit, and then beyond that, just don't worry.
I guess to a certain extent, the parent leave the business, large business families and all that, but a middle or a middle class or a slightly above this thing, they would have made some sacrifices in order to build that, to pass on, I guess. So, which, as you're saying, is right. Today, I think, yes, we do feel that we should not. We have educated them, and there are good opportunities in India itself or abroad for them to work and earn. And today, you can choose any career and be successful and earn well in that.
I don't know about that, but I also say that we should look at the flip side as well. So just like at parents, you are wanting to leave something for your kids. And it's fair because you decided to have the kids. Kids didn't ask to be born. So you need to educate and provide for them
of course,
until they come of age. But ideally, the flip side also should work, right? So kids should provide for their parents.
Yes.
How many kids take that seriously?
Mm.
Not enough, apparently.
Yeah.
But to be fair, it's not the same, really, because, like I said, the kids didn't ask to be born, so they have the right to be educated, whereas the parents knew they were going to get old, so they can't say, "Arey, it's your duty now to look after us," right? You are going to get old at some point. So you need to make that balance between that sacrifice, educating your kids, and looking after yourself.
Right.
You need to work on the assumption that the kids may not be able to look after you.
Yeah.
So strike a balance.
Correct. True. Is there something now, Women's Day, and then this podcast will probably go live on Women's Day. So is there something that every woman should do, whether she's a homemaker, whether she's a working professional or a youngster just started work, something she should do to take a step forward in a financial journey?
So as it started, I mean, women will at some point need to look after their own finances. And there's no reason why they shouldn't or couldn't. It's just been misinformation or they're being conditioned to say you're not confident. But I think they should take care of their own finances.
Yes.
At least to a certain level where they know what advice that they're being given is good or not. Okay, at that level. Now, how to get to that level is the challenge.
Yes. The practical
part. So I feel there's enough information on YouTube. Pick someone you like that you can relate to.
Okay.
You may or may not like me. You may like some other person. Whatever. Pick whoever you think, but make sure that they're credible. Okay. So if it's a finfluencer, do they have degrees in finance before they say what they say?
Yes.
And do they have a unbiased? Okay. Yeah. So figure out how they make their money. If it is by selling some product or service, then by definition, they're biased.
Yeah.
So make sure you find someone or a community. If not one person, find a community that you can relate to. And I think women also like learning in a communal way. So maybe a community. So Zeruda, for example, does have one called In Her Interest. But like that, there are many others. Go and find one where you can double and triple check what advice you're getting and say, I got this advice or this whatever. Does someone have any anecdote, whatever? So I feel you need to find your own learning style. Right. But there's enough resources out there available. There's calculators, there's content, there's communities. So pick a combination of these things. But definitely please do it. Yeah. It's like your health. As you said, we started with compounding, right? Yeah. A little bit on a regular basis is better than going on a crash diet one fine day. It just won't work. Right. So a little bit of knowledge is better, and then you can compound and you can make your money work on it early. And I would also say this, it's like other things. Sometimes, when you try something for the first time, until that point, you think it's scary, you think it's boring. Right. But when you get there, it's like, why did I wait so long? It was fun. This was fun. This was okay. Yes. So like that, sometimes just jump in, go along to that next community or the next webinar or whatever it is. And you'll see that it's not as bad as people make it out to be. It's actually fun. And jump in, compound. And the other thing I want to say is that so long as you learn the basic building blocks, okay, after that, you don't need to master the recipe book. Yeah. So when you read a recipe book and someone gives you some advice about stock, that stock, this stock, whatever, that's a recipe book. They're telling you what to do without you understanding why you're doing it. Yeah. I'm saying to you, I mean, I'm unbiased. I have nothing to gain. There's 150 videos on my channel. There's one titled Women and Money, a playlist. Please go and watch all of them for free. I mean, if there are ads, that money is not coming to me. That's YouTube, okay? But my point is, in your own time, watch it, ask questions, put questions to you. Yeah. If you're your audience, please put questions to you. My point is, there's enough resources there so you can go and master the basics. That's all I'm asking you to do. Yes. And the basics, I want to say, in 5-6 hours, spread over 5-6 sessions. So 1 hour spread over time, each over maybe a few months. will be enough for you to understand the basics.
Right.
Okay, that's all you need. Everything else, then it's a matter of you just putting the money down and letting it compound
Yes.
and not panicking,
Yes.
which will need some handholding.
Yes.
But it doesn't require any more complication than that.
Well, that's wonderful advice. And I like this idea of this community because you see, when four of us, my generation, four or five of us women get together, we talk about everything: movies, relationships, culture, family, everything, but never about money or investments.
Please do, and you don't need to share how much you're earning.
Yeah.
You can talk in percentages, right?
Yeah.
You can say, I have this in my portfolio. This is 10% of my portfolio. Nobody needs to know it's 1,000 rupees or 1 lakh or 1 crore. Okay.
True.
So long as you talk percentages, I think you should start talking with your girlfriends and generally with friends and family. Talk percentages. Nobody needs to know, and share and just trade ideas in terms of, okay, who's doing what and what is a good source of information or whatever.
True. We recommend a good restaurant or a movie, so why not?
Yeah, recommend good advisors, bad experiences, good experiences, all of those things. I think it's definitely a thing that needs to be shared.
Oh, that's great. Hansi, we've spoken for a long time. I hope the viewers have also enjoyed it. I've really enjoyed it. Before we close, anything specific or special you'd like to say to the women out there and the men folk also, probably who will get to see?
I don't know what, man. I'd say this, that as we started, I think we have been living in a man's world. There have been biases against women, and they are affecting all levels, right? Whether what subjects we're encouraged to do, which I wasn't encouraged, what jobs we get, how much we earn in those jobs, whether how we invest, how much risk we take. In that whole spectrum, women need to do better. In fact, I just one anecdote I want to share. Even in the earning level, I remember when I was at Mercer, I remember I was sitting on the investment committee. So this is a very big job, Asia Pacific Investment Committee and stuff. And my boss once pulled me aside and said, "We need to protect you." I'm like, "Huh? What? No, I got her on my own. What do you mean you need to protect me?" Like, yeah, but look around. Look at the investment committee. They're made up of older, white men with actuarial degrees.
Okay.
You are young, Indian, so brown woman with an arts degree. You are as different as it gets. Now, we know why we hired you, but if we don't protect you, you might get eaten alive.
Okay.
I kind of, that stayed with me because I realized how much the decks are stacked against us women. No one is stopping us, but we're not encouraged either. And that subliminal sort of conditioning that we get at every step of the way, I find that annoying. I feel we need to kind of take charge, take that power back,
Right.
and do this and show that we are good. In fact, we're better than. Actually, okay, I'm jokingly saying this. I don't think we are better or worse. Okay, fact is we're just different.
Yes.
But that conditioning needs to be countered. So the reason we are doing this podcast is just so that we can counter this conditioning that says money is boring and blah, blah, blah. No, it is not boring. It's fascinating. You just have not come to my session. Joking, I'm joking. So come to the right session, keep it up, and you'll do just fine. And I hope you can achieve whatever you want to achieve, because in the end, money is just that, helping you to lead a good life.
Security, financial freedom.
All of it to help your goals, right?
Which are important, right?
Yeah.
It helps you retain your self-respect and us.
Absolutely. Okay. So for example, that Meri Pyari Saheliyan podcast I mentioned, please listen to it. There are 6 of my real girlfriends who all have shared stories of how at some point in their lives, how it felt when they had money versus when they didn't have money, how they were treated. So money is not money. Money is not just it's actually everything that you think life is. So money gives you that power.
Yes.
Don't give it up.
Yes.
Hold on to that power. Take it back.
Take that. Yes.
Yes.
So there is a sisterhood here.
Yes.
So Hansi is here, and we'll be very happy to get your feedback. Just two questions, Hansi. To keep it on a light note, have you ever bought anything expensive that makes zero financial sense?
Yes.
Okay.
I bought 2 Armani jackets in the
Okay.
space of 5 minutes.
Okay.
Zero financial sense. One of them is a leather jacket, which I love wearing. The other one is a woolen jacket, which I've worn once.
Okay.
So, no, it didn't make any sense whatsoever, but I loved it.
Do you analyze people you meet and have some classification?
Do I analyze people? No.
Okay.
I don't. I just think people are people.
I meant like you analyze stocks and
No.
Okay.
I'm a financial analyst.
Okay.
In fact, I probably suck at analyzing people. In fact, I have trouble reading people. So no, I don't think I do. You mean in terms of psychological or things like that?
Meaning things like, say, oh, this is a very conservative person, this is a very high risk person.
No, I don't.
Okay.
I don't. I take them as they are. Like I said, in fact, I have this other problem. I'm maybe because of my Australian upbringing, or maybe not upbringing, but my Australian time, or maybe just my temperament. I am what you see is what you get. I am like that, so I actually take you like that. So if you have a problem with me, I can't read you. You have to tell me that you have a problem with me. Until then, I assume that everything is fine. So I get very annoyed when people just ghost me. I'm like, what happened? I don't know what happened. Did I do something wrong? Because until you tell me I've done something wrong, I have no idea. So same thing in financial matters as well. If I was an advisor, and I was one, when I would have to ask. So no, I don't analyze. I just have to be told what to do.
Okay.
Yeah.
That's nice because that's true. We expect people to be the way we are. I think that's how the natural.
Unfortunately, that's not the world.
Is.
Yes. So it's In fact, I remember I was being trained as an actor, and in acting classes, they used to say, read the subtext.
Okay.
I used to ask, like, why can't the director just spell it out? Like, why must the actor interpret this thing, right? And they're like, yeah, but imagine your favorite movie, and it was played by so and so versus so and so. How did they do it differently? They did it differently because the actor read the subtext and they played it differently, right? I must say I struggle with it, which is why I gave up acting. So, no. What you see is what you get.
Okay. You said money is emotional and complicated. I read in one of your things. So is every woman, right?
What?
Did I say that?
On a light side.
Did I say that?
I read it somewhere.
I don't know. I'm surprised I said that because I think money is not that complicated. It's simple but difficult.
Okay.
Money is actually very simple. Finance is very simple. What makes it difficult is our own temperament. Because money or finance or investing is actually, as we started, not about numbers, but about human psychology. It's about collective human psychology. So when you invest in the markets, there is no right price.
Correct.
The price is whatever the market is assigned to it. So we are actually guessing what the price will be in the future, what everybody else will assign to it. So I actually think money is simple, but difficult. Our own behavior, same thing. We think, market will crash 30%, we will not be affected. Okay, yeah, true. But what made the market crash 30%? Chances are it was something catastrophic, like COVID, right? So it's not just market crashing 30%, it was what else was going on. So I think people, when they teach money or they ask these simplistic questions, they don't realize that it's psychology. And usually nothing comes as simple and isolated, neatly packaged as one thing. So it's usually a combination of things. That's what makes it difficult. And maybe in that context, I might have said complicated. Yeah. I'm surprised I use the word complicated. Usually I say simple but difficult.
Okay.
But yeah, simple or but not easy, something like that I would have said. And I don't think women are different to men in that respect. I think, again, this is conditioning. I think men have gone this narrative that somehow women are complicated or complex to understand. I don't know that we are. I don't know. I'm not.
Okay.
So I don't buy that logic.
Okay.
Yeah.
Hansi, so it's been wonderful talking to you. It's been you've been very nice and set everything at ease.
You're kind.
So thank you so much for being here. Thank you, the viewers, for tuning in. Please like and subscribe to our channel, and please share your feedback in the comments. Thank you so much.
And please ask questions, okay? Feel free to ask any question under the sun,
Yes.
money related or women related.
Right.
But yes, go ahead.
Yes.
Thank you so much. Thank you for indulging me. And if you have made it to the end, then thanks for indulging both of us. Thank you so much for your time.
Thank you so much. Thank you.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.